Hi, everybody. Welcome. I'm Kaitlyn Allen with Global Affairs Associates, and we're here today with two esteemed industry experts to talk about the subject of energy transition. There's been a lot of talk and discussion out there in cyberspace about whether or not COVID and the related, oil demand crash will have an accelerating effect on energy transition or a decelerating effect. So we're here to talk about that today and sort of unpack the different perspectives a little bit. So I'd like to introduce our experts. First, we have Bob George of Ulysses Petroleum Management. Bob founded Ulysses in 2017 after 45 years in the petroleum sector. 40 of those in a well-known international petroleum advisory firm. His background's a mixture of technical and commercial, although most of his time has been spent in commercial and strategic advisory. Also A&D due diligence, advice to governments and government agencies on petroleum policy and resource management, including fiscal and licensing, dispute resolution, and that includes damages assessments in the upstream. So Ulysses is a group of like-minded 30-plus year of experienced professionals, and they provide technical, strategic, and commercial advice to the energy sector. And second, we have Tomas Salazar, who is an independent consultant and senior consultant with Global Affairs Associates. Tomas is a seasoned international chief executive with an ample turnaround track record and over 30 years of experience in the global energy industry. He began his career at BP, where he spent 15 years in photovoltaic, solar, chemicals, and exploration and production, followed by 16 years working to turn around private equity portfolio companies in a variety of sectors. He's worked all over Latin America. He's deeply familiar with Middle East markets as well. And we're very happy to have both of these industry veterans with us today to talk about this topic. So let's start with the big question, right? We'll start with Bob, and I'm just going to shoot right to it. Talking about the transition to a low carbon economy, do you think energy transition will be accelerated because of and after COVID?
Thank you, Kaitlyn. Bottom line, yes, I think it will. I think, like many things, it probably will not be a straight line. It'll zigzag, it'll spiral, it'll break into multiple parts or whatever. But I think if you take everything together, I think that the sheer disruption. I mean, disruption on a literally global scale. I mean, we're not using words here just to throw them in, but it's just been so massive that it is going to cause people to jump past what they might have hesitated a little bit more on, or at least enough people to do it. And I think the bottom line is, yes, it is going to overall move more purposefully and therefore ultimately, I suppose, more quickly in there. That said, same comment that pretty much everyone makes. Oil and gas is not just going to drop away tomorrow. It'll the balance between them may change, the speed at which and the nature of the change, all of those things we don't really know. We can just imagine on there, but suddenly you can't get rid of 160 million barrels a day equivalent of oil and gas production, even in 30 years to sort of 2050 when everyone's got their sort of the Paris sights on carbon neutrality. And so that's still going to be a facet of it all. But coming back again to your question, yes, I think it is going to happen. It's going to happen more, and there's more focus on it. That said, I think there are some differences out there. I think they are perhaps differences of culture as well as nuance in there. And when I started to think about the question, I mean, you know, there's one element that just starts with the very raw, well, tell you what, there ain't so much money around, so everything's got to be, you know, more compressed. But I think you move away from that, and then you start to look at some of the headlines, and I think it would be intuitive to most people anyway, that there is a lot more emphasis on it in the Europe side of the Atlantic than there is on the North American, particularly US side of the Atlantic. And there are probably a number of reasons for that, but as I say, it's partly cultural. It's also part that the industry is a bit different between the countries as well. Europe's certainly got some you know, significant and historic producing areas, but by and large, it is a energy importing bloc. And the US, although it's always been big on imports, has got a long history of having a domestic industry, and of course, in the last few years, has moved back into the export again. Fundamentally, you've also got an independent sector in the US, which is very different to anything you find pretty much anywhere. I mean, Canada has its own M1, but much smaller. But you know, really, just treat the US independent sector as something different. And I think that's where we will see some differences that you know, come out of it going forward. I think if you look at the majors in the US, I think again their culture is perhaps a bit different to the European majors out there, but you know, they're solid companies, and perhaps they're going to be a little bit more. A bit less high profile, perhaps. I was going to use the word rhetoric, but that has sort of some connotations that I don't intend. But I think less on there, they'll be more focused. But when you get down to it, they're subject to the same global exposure, reputational issues, dealing with other governments and everything else like that. So, and they're already on board with the basic ideas that things have got to change. So I don't think you're actually pushing against it. I think it's an issue again of trajectory, how fast, in what manner, and so on. We can talk a little bit later about some of the individual differences that are out there.
Yeah, so, sure. I'll come back to you. I'll come back to that to unpack that a little bit more in just a second. I'm sorry, did I cut you off, Bob?
No, the only other point, and we can touch on it later again, this comes back to the independent sector again, is there is a mass, I mean, this was the case anyway before 2020, COVID-19 and the collateral issues with pricing. But, you know, the independent sector over here was in deep trouble anyway. You know, all this has done is just moved it up, you know, 10 notches on there. And the sort of, you know, 90% of the iceberg bit in there is access to finance. And that's going to be massive on there. And, you know, wherever you look at it, the access to finance is also coming at it from an energy transition viewpoint. Some places a bit harder and faster than others, but whereas the majors can manage that a lot better, when it gets down to the independent sector, they're much more dependent, and that's where I think you might see a bit of bifurcation in there between the sort of raw, just let's just look at the numbers and be, you know, what are you doing about it type approach to it that they're going to be facing.
Yeah, no, I think there's a lot to be said for to unpack about those differences. And let's come back to that, but I want to switch over to Tomas and just ask you about the private equity perspective. I know something that I hear sometimes on the street is that you know, if the public markets aren't interested in you know, sort of traditional oil and gas type companies or assets, well, there's plenty of private money, right? There's plenty of private equity firms, et cetera. And yet we see a very much an attention from private equity on this topic. You've spent 15, 16 years running PE-owned firms. What is your take on all of this?
You know, I think, first of all, let me just complement something from Bob's speech, and that is, I mean, energy transition will require still a lot of production coming from oil and gas. And the biggest secret is going to be how do companies do it with a less carbon footprint and less carbon emission? Because oil and gas is not going to disappear. It just has to be produced and refined in different ways. Right? So, because renewables still growing, but it's going to take some time to replace the oil and gas. From the PE point of view, I mean, I believe that ESG is the HSC of the 2020. It's like, wearing a seatbelt. Nobody used to wear it in the past, but now everybody does it all the time. Someday, sooner or later, it's just a question of pace, but it will be mainstream. You will need to have a very good strategy, ESG strategy, and outcome to be able to raise money and be able to continue producing in the future.
I also think that on that, oh, I'm sorry to interrupt.
No, I want to say, no, go ahead.
Oh, well, I was just going to say, and I think that something that folks forget is a lot of PE firms are actually funded by pension funds and by a lot of public money, so to speak, that is perhaps more often subject to or perhaps signatories to the principles on responsible investment, for example, or have constituencies that are very, very interested in what where the money is invested. So that's all. Please go ahead, Tomas.
No, yeah, and complementing what you said, you have to get ready for the energy transition. As we said before, it's going to happen. It depends on the timing for it. You have to start to understand what the climate risks are for your company and your performance, but also how do you take opportunities from those risks, and making your company readier to tackle those risks. So also there's established framework for do this, and there's been a lot of conversation around it, but the most used one is the Task Force on Climate-Related Financial Disclosure, or TCFD. So an important part of this is really trying to incorporate all of this, all your activities that you are actually doing into your ESG strategy as well. Because, companies are doing a lot, because at the end of the day, you're doing a lot to be more efficient, and being more efficient means that somehow you are impacting the way that you're doing the business. You reduce your water consumption, you reduce the amount of fuel that you use, you don't hire child labor anymore. So it's going to be an interesting path forward. So I'm on it.
Well, Bob, and let me circle back to you, Bob. I mean, you mentioned the difference between the European and U.S. super majors, and there's a lot being said about that topic. Let's unpack that a little bit. Is it really the case that the European super majors are 10, 20 steps ahead of the American ones? Is that truly the case, or is there a little bit more under the hood to look at?
Yeah, I'd be hesitant to say that they are just way ahead. There certainly are. Thank you. There certainly are. I won't say studies, but you see reports come out, and they list and rank companies by whatever criteria on there. Platts has done one, and I think CMS, one of the law firms, has done one, and so on. And they rank the European companies up here, and particularly sort of Exxon and Chevron, the two largest US majors, lower down. Certainly, you've got a lot of consideration in the European majors. I mean, Shell sort of trialed back in June that it was going to have a major reorg, and Ben Van Beurden today has come out and confirmed a major change to Shell's makeup, a smaller company, lower cost, blah blah blah. but you know, very no detail on it yet, but nonetheless very focused on doing it. You know, BP's on you know, beyond Petroleum 2.0, because you know they were 20 years ago. John Brown tried to take them down that road, and then it kind of, you know, disintegrated in various things, but I think they're back to that same idea again. You know, ENI said it wants to split into two companies, you know, renewables and company, and the sort of oil and gas production company. Equinor, I mean, just the change of the name from Statoil to Equinor was a, you know, a sort of a hint. I mean, you know, Norway's in some ways a special case just because of its you know, situation, but you know, the most recent round of funding from the government for the oil industry there was you know, driving very hard at continuing to get electrification projects on the platforms out in the North Sea. So you know, you've got, I think, that when I actually went to look a little bit more at what the companies were saying in detail, I think it was a little bit more nuanced than this sort of clearly, you know, Europe's out here, you know, European companies are out here, US companies are down there. You know, Exxon is a, I mean, it's, you know, it's hard to criticize it as a business because it's just a very well run, you know, military machine in there, and it does its own thing in its own way, but it doesn't ignore any of the others. I mean, they say they are TCFD compliant. They're signed up to the, you know, was it the oil and gas climate initiative, and accept those things. I don't want to focus on individual actions as to whether they do or don't, but the point is there's no resistance to the big ideas that are out there. They will, however, do it their own way, but they're focused a lot on R&Ds is the big message that you sort of see on them all, and they maybe list different things. Exxon carbon capture, which pretty much everyone's talking about carbon capture, one form or another. But, biofuels, which I think people have different views on as to whatever it is. Chevron talks about those. It's already participating in carbon capture in Australia. Battery technology, stuff like that. But I think everyone's kind of got a bit of that. Got solar investments in there. So I think to go back to the companies again. Yeah, I think as with at a sort of national or regional level, I think the Europeans are more out front, whether you use the term out front as a metaphor or literally in the lead. I think you can play around with a little bit, but I don't think it's a sort of stark difference when you're talking about major international companies. I think they all know what's happening, but perhaps the US ones will deal with it a little bit in their own way, more so perhaps than well, I know everyone's going to do it in their own way, but they're going to have a more North American nuanced view perhaps than some of the other European ones. I don't know, Thomas, what's your view on how you see those?
Bob, thank you. It was a really well put what you were explaining. I would say that what I've been reading lately is that there's a different focus between even the majors, between the European and the US, where the European are really kind of more focused into investing in renewables and trying to diversify themselves from what they call dying production. It's really interesting because the example that was used in the article I read was the BP, saying that BP production is dying, so they need to start thinking about what they're going to be in the future. In the US, you see still a lot more focus in oil and gas, mainly just going for gas to reduce the carbon footprint. And as you mentioned, a lot of technology being invested, like hydrogen, carbon capture, and all of this. So I see that a big difference. I just want to highlight that a big change in all of this that we're talking about is the case of Brazil. When about 30, 40 years ago, they really put a lot of effort into developing their ethanol from sugarcane. And that has proven to be a really successful story in Brazil that will allow them to really reduce their footprint using some sort of renewable energy source.
Mm-hmm. Well, so let me bring it back to really the point of us having this conversation today, is thinking about advising companies, right? We're all consultants, and we all bring our own different viewpoints to how we advise our clients on particular issues. So it sounds like energy transition is coming. It's just a question of pace and timing. And with that in mind, what advice would you have for everyone but the super majors? So the smaller companies, the independent E&Ps, the companies in the supply chain that service the E&P sector. How would you advise them to hedge their bets on energy transition, or not?
I think on that, I'm not sure hedging your bets is what I would advise, because this is coming. I mean, there's nothing in that sense to hedge. It's really just a question of how far you go and when you go there, it seems to me. So I think the first piece of advice to, those that aren't really steeped in it already, is to get steeped in it, understand fully. And although, we've really talked about GHG and energy transition, it is actually a broader ESG platform that is driving a lot of stuff. So I think make sure you understand what, the marketplace in which you are going to be finding yourself, and regardless of the steps you then decide on what you're going to take. And I think that there is another sort of transatlantic bit to put into play here, and that is, the EU has got, well, it hasn't signed it into law yet because it's still got to get 27 countries to agree, but it's got its Green Deal, not the same as the Green New Deal in the US, but, not dissimilar ideas. And you look at Biden's latest statement from his transition plan, and there are definitely differences in nuance. He's definitely playing to a different political audience, but there's a lot of the same things, again, with focuses on R&D and transition and everything else like that's out there. So if to think obviously this is going to depend on the outcome of the November election, not just presidential, but Congress as well, as to what happens. And everyone knows the old military saying, nothing survives first contact with the enemy. So we know that things will not play out in exactly the same way. But, if you have a change in governing personnel in the US, you are going to have changes that are coming through. So again, I wouldn't hedge bets on it. I think the issue is, once you've understood it, you can then start to think, okay, for me, what is the appropriate pace and plan? As we said at the beginning, oil and gas is still going to be around, right? There's still going to be a market, but you're going to be under pressure from the financial sector, the investor side, and you're going to be facing, probably price volatility as the market tries to figure out what is the right price for these commodities and how they're going to play out. So I think you have to take all this into account. No hedging your bets, but just do the groundwork and then come up with your plan.
And I would just add to that as well, something that came up in previous conversations, and that is that people kind of think of energy transition as a policy-driven issue, and while policy is very important, probably perhaps even more important are markets, and the markets are very much pushing forward on energy transition and betting on it. So I think that goes back to your point, Bob, about access to capital and all of the who's funding the PE firms and what sort of pressures that they're putting on on PE companies, etc. So I think there's to some extent there's as you said before, it's pace and timing. It's coming at some point. It's pace, timing, and I think the November election has has influence over the pace and timing, but it's not the only thing. I mean, it's happening regardless of who's going to be our president. The international financial markets have decided it's happening and they're betting on it. So I think that's sort of, I think, to me, a lot of people kind of focus in on the election and as the driving factor for, for this, and it's just not. I mean, this is very far beyond anything a single U.S. election can control or not, in my opinion. Do you agree? I don't.
Yeah, I think,
Did I?
No, I agree, and my advice will be very pragmatic. It will be act on it, educate yourself, see what you're doing, and see how you can incorporate everything that you're doing into your strategy. And create a framework in which you can really move forward your agenda to be more ESG compliant. So you will get, as Bob was saying, you will get access to capital because there's going to be pressure from the future generation about how the money is being deployed and invested.
Bob, any closing thoughts, words of wisdom?
Words of wisdom. Wow, you're really trying to raise the bar here. No, I mean, again, it's really just a repetition that this is not an if, it's a when and how, and so it was going to be happening anyway. What we've just got is some different dynamics around it right now. I was surprised last year, actually, the intensity that had already built up around it about the transition. And feeling, this was it was like in 2019. I mean, what's the whole GHG ESG issue's been around 10, 15 years, maybe more, but as a focal point. But 2019, someone lit the afterburners. Well, 2020, they've really caused this thing to glow red hot, and you just got to figure out what's the strategy that's right for you on it, but you have to have a strategy for it.
I'll echo too that the 2019 was a fascinating year to be working in this space, because it was, particularly in Houston, we're the oil and gas capital, it was as if there was something. We all say something in the ethers, but it was just almost overnight, right, Bob? Like it was just this, Tomas, it was this almost overnight thing where one day it wasn't a thing and the next day it was. Of course, at Global Affairs Associates, we've been following and kind of trying to sound the alarm, so to speak, about it for several years now. And everyone was kind of like, all right, they're out doing this really niche thing, right? But last year it was suddenly like, oh, this is what you meant. And I think it's been an interesting time to be in Houston and kind of humbling to be part of conversations about it,
Not quite the same thing, although I can see some sort of analogies in there. But when you talk about Houston, I mean, living in Houston, but hailing from the other side of the pond, one of the things that's been interesting is that the UK, well, the whole of the North Sea, but the UK side of the North Sea, it's been 50, 60 years as a province, but it's mature, and when the price has gone down, it's really put the pressure on it, and it's looking for something to do. Now, the UK kind of got ahead in some aspects of the renewal with the offshore wind in that, but really two things: the country actually has a legal obligation that was signed into law that they're supposed to be 2050 supposed to be carbon neutral, and now everything you do in the North Sea has to sign up or has to be done in the context of that. The approvals for further development, are going to require that. And so I think everyone's looking and thinking, is this the opportunity now to have, UKCS 2.0 or 3.0 or wherever we are down there, but as a different type of province? It's not just an oil and gas producing province. This is going to be, something that's reusing all the infrastructure and doing things. And I think, for Houston, I think it's, we've always been the sort of oil capital. We had the 1980s downturn that really hurt it, and the last couple of downturns haven't helped, but they haven't hit quite as hard. But as you said, there's certainly been a focus. We need to look to where the future is, not where the past was. And the focus on whether it's medical or technology as well, but this is one part of where the future is, and the skill set you have in these main sort of headquarter areas is huge. You don't want to lose those skills that you've got built up, because they're not easy to, people are not as fungible as all that when it comes to a lot of this stuff. You need to be able to deploy it. So I think what you may be seeing in Houston as well is that same sort of focus on how are we going to take all this, how are we going to attract people in to replace the ones going out, but how are we going to keep these skills together and deploy them into where the future will be.
I think about the geothermal panel I was on a couple of weeks ago, the Pivot 2020 conference that was hosted by the University of Texas at Austin. And if you haven't seen it, highly recommend folks go and check out Pivot 2020 Geothermal, because that was a running theme of the week, was that geothermal technology. And of course, if they've developed all kinds of new things that allow you to do geothermal anywhere versus just over a volcano, so to speak. But those skills are and skills and physical equipment, right? So thinking about petroleum services and thinking about the oil field services sector, a lot of that equipment, and you're drilling a well is drilling a well, right? There's a lot of very obvious crossover to geothermal, and that's another potential area of growth as well. So I think a big theme of conversations that I have with folks is shifting to that opportunity mindset, right? Of there's all these kinds of potentially new opportunities from energy transition, and as you both said, and I know we've all read the scenarios, the 2050 scenarios, we all know and agree that there is obviously a role for oil and gas, but what will that look like, and how do we diversify the energy mix broadly speaking, so that we're not so dependent on one form of energy, on access to that form of energy, on the viability of the companies that supply it, on a cartel, etc. You have all these reasons that diversification is good. And so, I try to encourage folks that are, hesitant to think about an energy transition this way. Think about it as energy diversification, right? It's about diversifying our reliance on energy, on different forms of energy, as well as, basically mitigating climate change and having a cleaner economy, right? Tomas, did you have anything else to add? I know you've seen so much also from the Latin America perspective, having spent so much time in Brazil, in Venezuela, etc. Anything else you would add from that perspective?
I think to me the interesting part, talking about once again about 2019, is that when I left in 2010 for Brazil, talking about energy transition in Houston was kind of, hello, what are you talking about? And I came back in 2019, and most of the conversations I had to do with, how do we do, how do we reduce our carbon footprint? How can we be more energy efficient? How can we reduce the amount of CO2 that we generate when we produce oil and gas? So, coming from being something kind of esoteric into having everybody. And I'm talking about people that I know that owns midstream, small upstream companies that operate in the Permian and West Texas, as well as the PE guys. Talking about carbon emissions was kind of I think I came back to the right place now again.
Back at the right time.
That's a good point.
Yeah.
So I suppose in conclusion, our advice in general for the E&P ecosystem is to take position knowing that this is happening and accelerating, albeit potentially at varied paces, depending on where you operate. We are here to serve. Global Affairs Associates is a boutique ESG and sustainability consulting firm based in Houston. We serve oil and gas companies on these issues. And Bob George of Ulysses Petroleum Management has an incredible team of seasoned professionals as well to support as we all confront these rapidly changing times. You can get in touch with Bob, check out their website, ulysses-pm.com, and our website is globalaffairs.associates.com. Please feel free to get in touch. Let us know what you thought about the conversation. If there are additional conversations you'd like to hear, or if you have any ideas for other topics, please let us know. And feel free to get in touch through our websites.
Okay. Thanks, Kaitlyn.
Thank you
Thanks,
both.
Kaitlyn. It was fun.
Yes, as always. All right, thanks, guys.